Hello and welcome. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash Stock Screener to make long-term profit growth visible to help you benefit from growing dividends and capital gains as well. In this video, we take a look at dividend stocks once again and ask ourselves the question, do dividend stocks exist which yield capital gains of at least 1000% or more within the last 15 years? So you may think that dividend stocks or companies are paying dividends because they grow rather slowly. They pay dividends because they don't know what to do with all the money, so they give it away to their investors to please them at least. And now maybe there exist dividend stocks paying dividends since 15 years already, but still grew very fast and returned a yield just by capital gains of more than 1000%. And if we find these stocks, we look at what they have all in common, if they have something in common. So let's go. Here we are in Dividend Stocks Cash. We have 652 stocks right now in the database. It's not as much as all stocks you can trade in the world. That's more than I think 50,000 stocks. But I can tell you that if you are not able to create a nice portfolio, a promising portfolio, investment portfolio with these stocks, you won't be able to create it with much more stocks, because these are the most popular dividend stocks and the most promising stocks regarding long-term profit growth I was able to collect within some years. And now let's go. If we have the capital gains price change of the last 15 years, if we sort in descending order, we see the stocks with the highest capital gains on top. And for example, Monster Beverage, if you invested in 2004, 15 years ago, $1, the $205.70 US cent. Today, we see that most of the top achievers don't pay dividends, or that the dividends are rather low. Out of the top 10, only 3 stocks pay dividends. Next step would be to filter for dividend stocks. Then we go filter by years of dividend increase for at least 10 years, because I'm also interested in stocks which maybe pay dividends for not for 15 years, but 12, 30, 14 years already. And now the first thing we notice is that there exist stocks which pay dividends for a long time already, 15 years, 26 years, 23 years, and achieved capital gains still of more than 1000%. So $1 became more than $10 today. And we now take a look at some of these stocks. At the top performer, it's Lotus Bakeries from Belgium. The dividend yield is 0.8%. And they pay dividends since 15 years already, so since 2004. Now, dividend yield is rather low, so the first thing you might say is, oh, that's not really a dividend stock. To you, a dividend stock might begin with 1.5 or 2%, but let's give it a chance and take a look at the dividend history. In 2004, on average, the dividend yield was 1.75%, even as high as 2.35%. And during the financial crisis, it was even as high, the dividend yield as 2.83%. Just today, the dividend yield became very low, well below 1%. And the dividend yield became lower, also the dividends themselves increased. So they increased in 2004, it was just €140 to €40 in 2005. Today the dividend is as high as nearly €20, and still the dividend yield decreased. Why? Because of capital gains, or because of the stock price. The stock price in 2004 was as low as €60. Today the stock is traded at €2,460. So that's a stock like Amazon just paying dividends. So let's have a look at the second one, Alimentation Couche-Tard. It's from Canada. It's in the food industry, and yield was about 2000%. So $1 became $20. They paid dividends since 2007, I guess, since 12 years. Dividend yield is even lower than Lotus Bakeries, but have a look at the dividend history once again. And then we see that the dividend yield was also higher in the history. In 2009, the dividend yield was as high as 1.7%. Today, it's as low as 0.5%, so less. It more than tripled the dividend, although the dividends themselves increased from, in 2009, 5 Canadian cent to today 39 Canadian cent. And the reason for this, once again, rising stock price. Stock price in 2009 was as low as 3 Canadian dollar, and today stock is traded at 72 Canadian dollar. You might think now that this is not a dividend stock and that the dividends don't matter much for a stock like this. But is it true? Let's have a look at the full chart analysis. And then we have here the cumulated capital gains here. And then you see that it was a very promising stock with several thousand % capital gains. And that if we add the accumulated dividends to the overall yield, then we see that you nearly can't spot the dividends. So regarding the overall performance, they are negligible. But if we turn off accumulated capital gains and just look at the dividends, then we see that in the first years, Alimentation Couche-Tard did not pay dividends at all, so the accumulated dividends remain at 0%, but then they start paying dividends, and we see that the dividends accumulate, and that in 2015, dividends returned your investments already, and just 2 more years in 2017, they returned your investment twice and 3 times today in 2018. So regarding the overall yield, the part of dividends is very tiny, but on the other hand, if dividends alone return your investment 3 times, I think that's not a bad thing either. And for many investors, this would be an interesting experience to like a AT&T, for example. So this was the first 2 dividend stocks, the first 2 dividend top performing stocks. We have other stocks which performed very well also. And instead of looking at all stocks, we try to find what all these stocks have in common. And there it's very revealing if we take a look at my ranking here. It's a private ranking. I created it myself. You can create as many rankings as you want. And this ranking looks only at the earnings growth and at the operating cash flow growth. Here we have the result of the ranking above, and you see that the scores are rather high or even very high. We only have 2 stocks with medium scores. It's Texaf and Hengan International. And if we look at the capital gains within the last 10 years, we see that these are the stocks with the least capital gains. Hengan International, 135% capital gains, and Texaf yielded 282% capital gains. Still high, you might think, but compared to the surrounding stocks, it's rather low. So what all these high-performing stocks have in common, it's earnings growth. They all grew their earnings stable and high. So let's only have a look at Roper Technologies to show you once more what it means. This is what earnings growth looks like. We have here a change in the business year from October to December. For this reason, we have here a little gap, but this is what really counts. Growing cash flows and growing earnings in the long run. And if you have this, then this is what follows: capital gains because of growing valuation, because the companies became more and more valuable, or the stock becomes more and more valuable. And this is really the central message I want to share in this video. Pay attention to long-term profit growth, even if you're a dividend investor. This is Thorsten Tietz. Thank you for watching. Bye bye.